Welcome to Doc's Investing RX. I'm Doc, and today we're taking the scalpel to dissect portfolios of physicians from the After Hour community, helping these doctors get their own prescriptions for investing and on the path to recovery from their financial ailments. Now, let's go ahead and dive right in. Let's start with our first guest, Doc's Party. You're rocking a $3,000 portfolio on After Hour. You also have a med school debt of about $375,000 at 7% interest. You also have a unlinked retirement portfolio, which is a 401k plus an IRA at $100,000, and you have a W-2 with a 6% match. Now, I'd like to go ahead and welcome you to the show.
Thanks for having me.
Yeah, absolutely. Tell me what's working and what's not.
Yes. So I've been fairly aggressive and high tolerance to risk with my portfolio that's linked on after hours. I've been doing options plays, both calls and puts, and I find that that has not worked as well as I thought it would for me originally. Thankfully, I've kind of kept my portfolio about even in this pullback with the S&P. I've tried different strategies. I've done the option strategies. I've tried to do intraday trading and momentum trading, swing trading. And all those strategies, I find that I'm getting in at the wrong times. I'm getting in at the top, selling at the bottom, taking some hits. And so over time, I've kind of adjusted my plan. And recently, I've actually exercised a couple call options in with qubits. And I'm going to try to hold on to it for a little bit longer, probably do some covered calls and see if I can grow my account that way. I think I was trying to be fairly aggressive in growing my account quickly. And unfortunately, that strategy has not worked as well as I hoped it would. The reality is, and I think if you look at some of the more successful portfolios out there, it's really a buy and hold type situation that you see the best returns and the best results. So that's kind of how my account has evolved and is continuing to evolve and hopefully grow from here.
Okay, so now with a buy and hold strategy, is that the plan going forward?
It is, yeah. So the plan moving forward is the buy and hold strategy and then using covered calls to kind of supplement that as well.
All right, excellent. And so your investment portfolio is full of stocks that are not mega cap names. They're actually the opposite. Any reason why you chose those particular names, including MVST, Celsius, Cooler?
Right. Yes. So that was part of the learning process and the growing process, right? I got into some of those really hyped up retail trades that didn't work out so well for me, especially like Cooler. Got into probably some shorter dated call options that I should never have done, and lost a pretty good chunk doing those kinds of investments and trades. The Celsius one, actually, I had gotten leaps with that one. And so some of those options I've already sold. And that's one I'm kind of hanging on to and hopefully can make a little profit on. The microvast options, I have a pretty good outlook with that. I think their earnings reports, they've shown to be profitable over time. They are invested in lithium battery technology and production. And so as EVs become more popular, I do think that this is something that I'm going to exercise those call options and hang on to those shares.
All right, awesome. I think that's a good approach. And I think that's one of the most important things is understanding what these companies do that you're taking ownership of and understanding sort of the long-term prospects and what your strategy is for the long haul, whether you're going to dump this company if it starts to underperform. As long as you're aware of all that, it's okay. I got to say that it is a very high risk portfolio, but you are still on the younger side and can take big risks. And with big risks come big rewards. Unfortunately, sometimes these rewards can be underwhelming and you can lose a lot of money. So I do have a basket of stocks that I've lost a lot of money in. Shout out to Space, Sava, Tilray. The list can go on and on. So as long as you understand what you're invested in and have a bailout plan, I think it's reasonable. I do notice that you don't have any SPY or VOO or any sort of ETFs.
Yeah, so that's something I do plan on adding to my portfolio as I slowly grow it, and I've changed my mentality with it. About every month to 6 weeks, I will be injecting about $1,000 into the account, and so I'm slowly going to start grabbing onto some of those larger cap names and S&P ETFs.
Okay, good. What percentage of your entire paycheck is going toward saving slash retirement?
Yeah. So right now I have about 6% that I put into my 401k, which my work does match. So they'll match 4%. And then after 2 years of employment, because I'm a W 2 employee, At the end of the year, they'll do a 2% contribution. So it's technically a 6% match, my 401k.
And that's awesome. I got to say that I love employer match. It's essentially free money, and you definitely want to maximize every free dollar that you can get, especially towards retirement. And I think that's the hardest thing is that long-term prospects, especially when you're 20, 30, 40 years out from retirement, but it will come and that free money will capitalize and that will be a huge pickup to your portfolio. Now, being out of residency and in practice for a few years now, have you noticed any lifestyle creep? How much of your paycheck has been gone to frivolous things?
Yeah. Uh, so after residency, we did do one of those no money down physician type mortgage loans that I'm regretting a little bit. And so quite a big chunk of one of my paychecks. So I get paid every 2 weeks, and so about half my paycheck, one of those weeks goes towards my mortgage, which really kind of eats into my ability to put money away to pay off debts, whether they be credit card, car payments, things like that. One of the things I did is I did treat myself and I bought myself a brand new truck, drove it up the lot, but I was able to put a hefty down amount on that. So my truck payment's not horrible. So yeah, I mean that lifestyle creep, it's a real thing. It happens, right? It's you've sacrificed for years during medical school, putting off any kind of just the little things in enjoyment, right? Like you're not most of the time you're not going on big trips, you're not spending on big fancy things. Residency, you're working 200 hours a week on a very fixed income. For that, it's like, "Oh, I can breathe, and finally get that, put money into a house, or I can, get that new vehicle that I want, or go on that trip that I wanted to do." Looking back, do I wish that we had lived off like we were still on my residency salary and kind of paid things off more aggressively and was more aggressive about putting money into investments? Absolutely. But at the same time, like at some point, you kind of got to be okay with, I have a family, wife, 3 kids. You got to be okay, treating them because not only did you go through this journey, they went through the journey too with you, right? And so at some point, you got to do those trips to Disney. You got to put that, spend a little bit of money and just enjoy life.
Now, I know it sounds like a lot, but one fourth of your monthly paycheck towards your house is actually pretty good. So financial experts say about one third as a maximum of your paycheck. So the fact that you're at one fourth of your paycheck is good. Obviously, it's always nicer if you're able to dedicate even less of your paycheck towards your roof over your head. And then, of course, you got to have your wife, the kids as well. And Time Magazine put out an article that raising a child to age 18 is a quarter million dollars, which is wild if you think about it. So that's just getting them to age 18. That does not count towards tuition or anything else for college, etc. So it's smart to invest and start being financially savvy early just to set up the entire family for success. Now, what is your plan for retirement?
So initially, when I started this journey, I was like, I love medicine. I'm going to work the rest of my life until I can't work anymore. That quickly changed over the course of residency and COVID, where I want to retire as early as possible. And so my plan as of right now is probably to work the next 25, 30 years max. And so that's why I have the two different accounts for now. I have my 401k as well as the IRA that I contribute to. One of the things I learned early, so my family has been very big into investing. My father invested, my grandfather invested. And so investing has been kind of part of our lives. I mean, one of the things that I learned from my father was that you want to have multiple sources of income when you retire. My dad was lucky enough to retire at the age of 55, and he had multiple sources of income. He had an IRA, he had his benefits through the government from his retirement plan, and he had a couple other property investment as well. And so he was able to live very comfortably on his investments after he retired. So that's something that has kind of been at the forefront of my investing strategy with my 401k, with the IRA, and also setting up a IRA account for my wife as well.
Awesome. Well, thank you very much for all of that. With that said, I'd like to go ahead and introduce our next guest, the Real Gambit. Now, the Real Gambit, you've got a very nice portfolio on After Hour of $350,000. You come from a two physician household where your wife also has a portfolio of about $200,000 invested. You mentioned that you had a med school debt of about $200,000 for both of you at 5 to 6% that got paid off.
Yeah, it's a total of 400 that got paid off.
Yes. And so that's a huge amount of debt that's already been cleared. And so now you can focus on your financial health. So tell me about your investment strategy.
So I guess, up till now, what has worked best for me is just buy and hold strategy with index funds. I feel as though I'm still pretty young and I don't have any bond exposure, but as maybe in 10 years or so, I'll start to diversify into bonds. And then I also have about 10% of my portfolio, which I dedicate to kind of more higher risk trades with options and buying smaller cap companies just because I love the stock market and I love reading about companies and, trying to find that alpha. It's just kind of a hobby at this point. So yeah, probably about 10% of my portfolio is dedicated to that.
Okay, and then how much money are you putting away towards your
So we
investments?
are maxing out all of our retirement accounts. So 401ks, two Roth accounts, also maxing out a 457b. And then I'm also saving additional money in just a cash account for investing. And I think overall it comes out to about 20% of our gross income.
Okay, and then how much is going towards your mortgage?
We got really lucky. We live in a low cost of living area. Our home initially we purchased for 380,000 and it's appreciated to I think somewhere in the 500s now and we're really lucky we got in sort of before the housing crisis and I think our interest rate is about three and a quarter, and we pay about like 1,700 a month for our mortgage.
That's incredible.
Yeah.
So, med school debt paid off, a mortgage that's very reasonable. Is there any other sort of major debts that are going on in your life? Other payments?
No, we have two car payments. They are $800 and $600 a month, and then our biggest expense is just our two kids. So childcare.
So, with all that, still saving 20%, it sounds like that you could actually be putting away more money if you wanted to.
Yeah, I think now we're saving a little bit of money just to do some house renos and kind of things around the house. And then once that is done, then probably continue to save more. You asked about lifestyle creep earlier. I guess travel is kind of the big thing for us. So spending more money on that, especially traveling as a family of four is a lot more expensive than backpacking when when you're a resident. So that's probably been our biggest expense.
Are you flying first class or are you still doing coach?
No, we're still doing coach, but when I was a resident, I would just pick the cheapest flight. I didn't care if I had to have three layovers and sleep in the airport, but I'm not doing that anymore. We're flying direct.
No, I hear that. So, I still have not flown first class. And again, it's just one of those financial decisions. It's basically 3 times your coach ticket. And I just, as much fun as it would be to have your own chef and bed during the flight, it's just hard to shell out. I'll pay for the extra leg room, but that's about it.
I agree. I'm the same way.
Excellent. So what are your retirement goals?
So I I really enjoy my work. I kind of picture myself working forever. But I would like to have the option of not needing to work if I don't have to, or if I decided to change my mind. So I'm planning to just save as much as I can. And then if one day I just decide that's it and I want to walk away from it all, I can. But I don't have a certain number of when I want to work to or anything like that. And I'm sure as the kids get older, maybe my outlook on that will change, but this is sort of where I'm at now.
Awesome. Well, thank you for that. And I'd like to introduce our third guest, Cole Hunt. Now, Cole Hunt, you have a $12,000 portfolio in After Hour. Your retirement, your 401k plus your IRA is at $15,000, and you have $0 of med school debt with the benefit of graduating from a foreign medical school. You are fresh out of residency, so you haven't had much time to start putting money away into investments and retirement. But please go ahead and share those details on what is your investment strategy so far.
So initially, I had no idea how to do it. It was pretty hard. I think the first thing that's kind of spiked my interest was when Trump announced the Trump coin. I know that was not the smartest thing. I invested it when it was like in like $20 and then went up to 70. And then as soon as I saw it trickle down, I was like, I need to sell it right now because I don't think it's gonna go even higher. So I made a profit, and it was a profit over the weekend. I was like, this is nice, you know. Told my wife, let's go out for dinner, and we went out for dinner, and then I was like, I think I can start doing this. And then I got into an app, Autopilot, and I saw, oh, let's see who's investing here, and I saw Nancy Pelosi. So I read more about her. I was like, oh, so everyone knows she does something here. I'll see what she's investing in. And that's how I kind of started investing in copying her portfolio. And then I would get online to read more about how to invest. I got into Reddit, and that's how I got to see After Hours. So I started reading on what everyone was doing on After Hours. And I was like, initially I had like investing like 10, 12 different things. I was like, this is making minimal money for me. So I sold the ones that I knew that from what I read, were not going to give me as much profit. So when I saw in prior to February 14th, where everything was high, I was like, oh, I enjoy this. And then everything went down, right? I was like, oh, this is a huge loss for me. But then the more I read and after, I was like, okay, if you truly believe in something you want to invest, the best thing is to hold it. And one of the things I do kind of believe in is Nancy Pelosi, you know, like she's raised so much money and like there's something that she knows. I was like, I'm just going to trust her with Tempest, for example. And then I know about NVIDIA since I was a kid. I used to play lots of video games. I know that NVIDIA makes the chips and everything. And now where AI is heading, I was like, I think this is going somewhere. That's how I kind of got into it. I was like, I think this is what I should do. Like if it's going down, I just need to have conviction that it's going to go up. Because if I put in money in it, I know that's probably going to go up. And then I invested the money that I don't need. So if I lose it, not like, oh, I need to sell it because I need the money. It's like if I lose it, I mean, I can wait for it to kind of go up. So for example, right now, my biggest investment was Tempest. I bought it initially like at $30, and then I sold it high and it was going higher. I was like, I'm going to buy it right now more. And then it went down. So I had a pretty big loss there. But I'm just going to hopefully wait for everything to kind of get better and hold it because that was my conviction. And the other thing that I kind of do is I read what they say at After Hours. They say, oh, read about this, read about that. For example, RXRX. That was one of the things I looked at. And then Moderna. So I would read about the news about that and try to invest from there. And after having that huge loss, I think the thing that has helped me out the most was if I have a 5% gain on something, I'll sell it and then try to invest in something that's going low. That way, even though it's 5% will slowly start accumulating
And then you're also in MicroStrategy.
as well.
Is that a play on Bitcoin or?
Correct.
Okay.
Yeah. So same, I looked at the prior months, how they were doing, and I see the trend that every kind of 3 months it goes down and then it goes up into like the 400 range. So I'm waiting for that to kind of happen, hopefully.
Okay, so your strategy is a little bit more speculative. You tend to follow the trends, and of course, you were able to jump into the market at one of the most volatile times that we've had in a while. But I do admire that you did not quit because the market will have rides like this. And was lucky enough to be an investor in the last Trump presidency, and this is basically what it's like investing because all it takes is one tweet, one word out, and next thing you know, your portfolio is swinging in the opposite direction. But it does require patience. And if you do believe in the company or you have a thesis behind it, then that's the way to play it. You are doing the buying and selling strategy, which is good. It does take a lot of work and it's a very stressful way to do things. It also leads to a little bit of a tax burden. So that's something to keep in mind is that if you do buy and sell, you do have to pay a little bit heavier on the capital gains taxes. So tell me about your monthly savings and so forth. How much money are you putting away towards retirement?
So right now, I did take a couple of loans when I moved here to where I'm at right now, and the loans had a pretty high percentage. They're like in the 15%. They did suggest on me getting a financial advisor prior to starting residency, and he was like, "You first need to tackle these high interest loans rather than saving money because you need to get this away because that's losing you money." So right now, I do have like three pretty big loans. So I'm trying to tackle those that are in the 15% kind of range. So I do want to tackle that before I start saving my money to be able to kind of be comfortable with the lifestyle that we want. Because most of my money goes in food. So
And that's a reasonable way to approach it. Now, you consider 15% and the average return in the stock market is about 10%. It just makes a lot more sense to tackle high interest loans like that. Now, what percent of your paycheck is going towards debt?
I would say about 30%.
Okay. And what about the other 70%?
It's like about 15% for the cars and then 30% for where we live and the rest is for whatever we need at home. Groceries and all that.
Okay, good. So as long as you have a certain amount percent going off towards the debt, being very fortunate to not have any med school debt puts you in a really good financial situation to start. I do admire your discipline in tackling those high interest loans early and be able to knock those out. How long do you anticipate it will take before you're out of that debt?
Maybe a year or two.
Okay. And then after that point, all that money is going to go towards savings and retirement, I'm assuming.
Correct.
All right, good. So what's your plan for retirement?
I told my wife I wanted to retire early, like in my 50s if I could. I'm going to try, but I don't think it's going to happen because I do want to, like, our plan is retiring maybe in Europe, but just, like traveling in Europe. And so that's kind of our retirement plans.
I love that. And so, kind of opening the floor to everybody. I think we're all in a similar boat where being able to retire early is in our deck of cards. There's a term for that, FIRE, right? Financially independent and retire early. And I think it's because part of it may be the generation that we're with and that we don't necessarily want to work till we're dead, right? Nobody says on their deathbed, I wish I worked more, right? Nobody ever says that when they're dying. And so my approach to life is put away as much money I want to get out and be able to enjoy life, travel, and do other things. As much as I love helping patients and doing great things, it's a burden, right? The hospital systems, the admin, the insurances. I think we're the only career where reimbursement actually goes down with inflation. So as the cost of living goes up, we get paid less and less in response. It really is a sacrifice for us.
I think it's with our jobs, we face mortality every day, right? We have patients who are very, very sick. Sometimes, unfortunately, they pass away. And so being confronted with that reality almost on a daily basis, you realize I need to go out. I need to enjoy life. I need to go see different things, try new foods. And so that's really been a driving factor in wanting to retire as early as I can and be independent financially.
I've certainly seen patients who are 63 years old and have terminal cancer, and they spent their entire lives, waiting for retirement, and then they only got 3 or 4 years out of it. That's my biggest fear. It's, and the flip side of that too is, with fire, I mean, everyone's financial situation is gonna be a little bit different, but if you're gonna spend, 10 or 15 years eating, rice and beans and not, putting the heat on during the winter just to maximize your savings, maybe by the time you get to the end of your journey, you've realized that you've wasted the whole journey. That's kind of the flip side of that too. So I think there's a balance somewhere in there.
So what about you, Cole Hunt?
No, for me is I did similar to it. I injured my back at work like 4 months ago. Like I got two herniated disc, a lumbar tear.
Was it moving a patient?
It was. It was.
I knew it.
It was. So like for me it was even hard getting on my car, getting to bed. I couldn't even put my socks on. I'm still in pain, but it's more tolerable. And I was like, this is me young. If I continue working like this, I won't be able to travel. Like all the things that I enjoy, because I couldn't even sit for a meal because the pain was very bad, so severe. I was like, it's not worth it for me to continue working because at the end of the day, if something happens to me, I'm easily replaceable. They're just going to hire someone, take my job, and all the job that I did, it would have been for nothing. So I think that's one of my main reasons to right now. I'm like, I do want to retire early just to make sure to enjoy it with my wife. But if we plan to have kids, I want to enjoy it with them and not be working all like 24/7. Well, I still can't do it. Because if this happened in the future 20 years, I don't think I would have recovered. Might have had surgery or something.
Now, that's an important thing to note is that having disability insurance is super important. Even though the chance of needing it, even in your case, you're still able to function. But just in case that something happened to you, that you're able to still collect a monthly paycheck because as you have the lifestyle creep, you have these debts that come in. And we talked about student loan debt. There's no way out of it except death, right? You can't bankrupt out of it. You can't write it off. Med school debt and student debt in general is one of the biggest scams in America. There's no reason that they need to be charging 7% interest and something that you can't even count against your tax. But Besides the point, having disability insurance is just a small insurance policy that you put away, and then that way you protect yourself just in case. There is a little bit of a thing to remember with it that it does, depending on how much premium you pay, it may take somewhere around 3 months before it kicks in. So, if it's a serious enough injury that will last more than 3 months, it can be useful, but for most, it's not, and of course, that's what they're banking on. But again, just in case, it is worthwhile to have, especially when you're on the younger side.
Yeah, I did get a disability insurance. I did pay for it.
Oh, good. Oh, good. Did you file a claim?
Not yet because I'm still gonna be able to work, but, I when I was doing it when I was a resident, I was like, I'm young, what's gonna happen to me?" And then 4 or 5 months in, I was like, "Oh, look at me now."
I had an attending tell me, "You're issued 1 back in life." So, I use that advice always, and remember to always be very careful when doing anything with your back. Now, how much money is enough money, right? So, what do you guys think in terms of savings and retirement? What is your goal?
Um, so if I got to 5 million, I think couldn't ask for more. Hopefully I'm lucky enough to be able to get there, but um, that's kind of my number.
Say 5,000,000. 5,000,000 Koreas.
I don't have a specific number in mind. Obviously, surpassing 2 million would be great. That's not something I've locked down yet, just because, pretty new in this journey, starting off as a been intending for the last 3 years. So, yet to be decided, but obviously, want to be aggressive about saving as much as I can.
And I think it's important, as long as you have a goal in mind, there are calculators that you can use because one of the most important things is inflation is counting against us, right? So every year that you work, the value of your dollar drops 3%. So say if $5 million is your goal, maybe that's your goal right now, but by the time you retire, that $5 million isn't really worth $5 million. It may be worth 3 million or 4 million. So you may have to shoot a little bit higher. So I do recommend that folks punch in their numbers into an inflation calculator just so that they get an idea of sort of what their goals are, and that will help better plan your investments, right? So for most people that if you can get 10% returns and put away a good chunk of change, you may be able to get there pretty quickly. Less likely if you put in smaller chunks or you are risking a lot of money in YOLO plays and options, right? So the adage, get rich quick, get broke quick, right? You look at all the wealthy folks. We talked about Nancy Pelosi, talk about Warren Buffett. All these folks have the buy and hold strategy, right? They bought, they held, and they just waited. And the money will compound and it's real. So if your money doubles every 7 years on average, a 16-year-old with $5,000, if they just left in VOO, that $5,000 would be $1 million by the time they turn 65. And so it's really incredible if you think about it. And so it's unfortunate that Cole Hunt had to jump in at a very volatile in the market, but keeping your head down and sticking with the game, it will pay off in the long run. But I do recommend at least having a basket of VOO. That way, you know that money's going to grow and you can put a little money towards it, but you can start doing individual stock picks because at least you have a good foundation, right? You have some roots that are going to grow. And that way you can start branching out and doing individual stocks.
Yeah, the other thing too that's nice, and I'm just sort of starting to do this, is to just sell covered calls on that VOO portfolio. There is some risk associated with that, but I think especially during this Trump administration, there's a lot of volatility, and that volatility is reflected in the premiums that you can collect. So I think there's sort of an opportunity for that. But we'll see how it works out.
Yes. And so selling options is an excellent strategy. So if you're bullish, you can sell put options on your favorite stock and choose a strike price that you'd be willing to buy the stock for. Selling covered calls is also another strategy. The only thing you got to be careful of is if the stock market does rally and blows past your strike price, then you may end up having to either just sell, and it's technically not for a loss, right? Because you've ideally chosen a strike price that you're okay selling at. But at the same time, if it does rally, you just have to be ready to, hey, maybe I need to use margin to buy some extra shares to cover this covered call. And that could be a way to approach it. But the great thing with when you're selling them is that you can always buy them back, roll them out, and give yourself more time and just kick the rock down the road and deal with it later. And at least you're collecting premium. Whereas when you're buying options, you're paying this extra premium. So not only does the stock have to rally or drop a certain price point, but it has to go above and beyond just so you can collect back your premium due to theta decay or time decay.
The other option you could choose, if you really believe in a company and you want to buy and a holder and an investor, is selling cash covered puts, right? Especially in this volatile time. And so sell a cash covered and then hopefully it hits your price and then get those shares hopefully at a lower cost, hang on to them during this volatile time.
Yeah, Warren Buffett actually did this with Coca-Cola, of course, right? So he chose a strike price that he was okay buying it at, and he kept selling the put for Coca-Cola and collected the premium. And soon he got Coca-Cola for his strike. And so not only did he win out in buying Coke at a good price point, but he also collected extra premium from selling those options. So that is a great strategy. And so there are different ways to manipulate, right? To work on these investments. Have you guys ever considered alternative investments besides the stock market?
I actually had a horrible experience with an alternative investment that kind of turned me off of them. I invested in a REIT, and when interest rates started to go up, the whole REIT just collapsed. So I don't know where I'm going to come out on that investment, but it's probably like a 80-90% loss.
How about yourself? I know, Clint, you got the MicroStrategy and, technically that crypto space.
Yeah, but I think right now, until I get a better grasp of what I can do with the market and the stocks and what else I can invest in, I'm okay with what I'm doing right now because I want to be more better informed on what would give me the best return and everything before I start investing.
What about you, Doc's Party?
So I've actually considered real estate investment. So I haven't done any other investments other than the stock market, obviously. I'm not as familiar with real estate and real estate investing in properties and things like that, but that's something that I think could have a lot of upside to it, consistent income, and something I want to try dipping my toes into.
And I think diversification is very important. As we've seen with volatility in the market during these downturns, it can be important. I know that you mentioned the real gambit about bonds. Bonds are extremely conservative. The return on them is not as high as you would get with stocks. However, it is a valid strategy. And when you invest in individual stocks or even ETFs, it is considered an aggressive approach. So being young like you guys are, investing in stocks and the stock market and ETFs is actually a very good approach and a great way to build wealth. With that said, there's nothing wrong with a little bit of diversification. I too have been a victim of bad investments. There was this crowdfunding real estate that I got into where you put money away and people, when they're using other people's money, aren't as strict and they tend to fall into bad decisions. And half of those investments ended up going bankrupt. So at least with the stock market, you feel like you have control of your money and it's just easy to manage, right? Whereas with some other investments, it may be a little different, right? I know people who do collectibles, right? Whether it's art or cards, there's different ways to play it. There's crypto, right? Now, do you guys have any questions for me?
Yeah, you have a large portfolio, very impressive. What is your strategy? Are you kind of more into picking stocks, or do you prefer the ETF approach, or are you doing options?
Yeah, so have a diversified portfolio. So outside of After Hour, I do have some real estate. Now, the real estate itself is stressful. So I do have a property manager that takes care of it. So when it comes to real estate, that is the long game for sure, because property values will increase over time, but sometimes they'll be very stagnant. And dealing with renters and the cost and taxes, et cetera, is its own. But it's a long game, and eventually it should pay off. With the After Hour portfolio, it is a combination of both my retirement portfolio and savings. It was primarily made with investing in really good companies like Apple and Tesla. So I still have a share of Tesla that I own since 2015. The value of it is $10 a share. It's split into 15 shares now. The sad thing was I had hundreds of shares of Tesla and thousands of shares of Apple. And that is one of the poor investment choices I made over the period of time, was not buying and holding. So the portfolio is, yes, impressive, but it would have been multiples of that if I just spot and hold. So that's why I share that advice with everybody, is that the long game is a real thing. And if you just weather the storm and not panic, sell, it will pay off. And that was my problem, was trying to outsmart the market, panic selling, and investing in bad stocks. So meme stocks, been there, done that. Hopium is the driving strategy. Been there, done that. Yeah, primarily investing in the S&P 500. I do have a good chunk of VOO and similar ETFs. However, because of my friend, he told me the S&P 500 is the top 500 companies in America. You can just buy it, forget it, right? They'll manage your portfolio for you. However, do you really want to invest in the bottom 499 companies, right? So why not just invest in the top 1, top 2, top 10? So I've altered the investing strategy and started focusing just on the big players. So primarily Apple and Nvidia being the 1 and 2 of the S&P 500. And I doubled down by selling put options to collect premium and then use that money to buy additional shares. So with that said, not only in the long game itself, but I'm utilizing selling options to create an extra amount of income to further multiply those earnings.
Other than the top 10 that you invest in the S&P 500, what's your other criteria for investing in stocks? What's your due diligence? Are you looking at their earnings, their growth potential? What is it that makes you a company?
Yeah, so I do have a couple of sort of these lotto plays that I call them. And so when I look at a company, it's got to have a future, number one, right? So this is a stock that 10 years from now, I see this company still being around and bigger and more profitable than where they are now. So that's probably like the most important thing. If I can't say for sure they're going to be around in 10 years, then that's just a high risk play. So I try to minimize those kind of plays. So the only play that I have that's like that is Lucid, right? So this is a stock that has amazing growth potential. Their financial situation is a little shaky, but they are backed by Saudi money. So I feel very confident about their future, that they're not going to go anywhere. Again, still a very shaky investment. So it's not a YOLO play, but I do put a sizable chunk. So evaluating stocks, I think that's the most important thing, is, do they have a future of at least a 10-year time horizon? Are their finances in order? Every quarter, are they making more money or less money? How are the expenses going and their EBITDA and so forth? So it's important. But again, primarily with the mega cap names like Apple and Nvidia, it's pretty easy to see that these companies aren't going to go anywhere.
Yeah, one thing that I've always found is probably a weakness of mine is that I look at some of these companies like Nvidia or Apple, and I'm like, oh, they're so expensive. Like they're already, so big. They're not going to have enough growth. I want to chase something smaller that's, going to get really big. And because of that, I end up not investing in them. But I just got to get over that because clearly it works.
Yeah, if you look at, I mean, that's why these companies continue to split, and you look at these companies have cash hoards. I mean, Apple has over $100 billion in cash. So in cash alone, they have more money than most of these companies are worth, right? And that's just a juggernaut that, you want to ride the wave, right? And people ask me, well, what about AMD? Like, yeah, AMD is a good company, but Nvidia is the leader. So why wouldn't you ride the juggernaut? Do you want Scottie Pippen or do you want Michael Jordan, right? So again, you got to think about 10 years from now. I know Nvidia is the market leader when it comes to chip play. They're not going to go anywhere. They're sitting on a cash hoard themselves. They're making the right AI investment choices. Jensen Huang is diversifying NVIDIA outside of just a purely chip play, but also making investments on different companies and strategies. So it's really just knowing that the long game is intact. And the important thing to remember is that if these companies start to underperform, you can always sell and move on, right? If for some reason Apple or NVIDIA drop off, right? They're no longer number one. Maybe they drop to number 5, number 6. Hey, maybe at that point, I start selling off shares, start moving on to the next top play. So that's the other great thing about the stock market is you don't have to stay with these companies the whole time. If they start to invalidate your thesis, that 10-year time horizon, you start to get a little shaky and say, you know what, I'm not sure if they're going to last that long. You can always sell it and move on, right? So that's the approach to do it, but you got to stay patient. If the company isn't going anywhere, neither should you.
that in mind, do you have a mental stop loss, a hard stop loss on any of these stocks? Are you constantly checking the market and seeing how it's doing day to day?
So, yes, I do keep an eye on the market, and when it comes to stop losses, I have a mental stop loss, but I do not put physical stop losses willy-nilly unless it's a day trade or a swing trade. Apple isn't gonna go anywhere, and Nvidia isn't gonna go anywhere, and those are my 2 largest plays. The problem with the market is that you'll have flushes down, and the market will bounce back, and we've seen that even just the past week. So having stop losses will leave you selling Nvidia at 104 when it's back at 121. So in my mind, these are mega cap names, and they'll ebb and flow with the market, but the long game's intact. And that's why it's important to just kind of take the emotion. And I find if you are checking the market often, emotions may start to creep in. If you're worried about your portfolio, you may have to reconsider your investment choices because you should trust your investments that no matter what the market is doing, you're stuck on a island for a year and you come back, your portfolio is going to be just fine, right? And that's the portfolio you want. If your portfolio you're worried about next week, things are going to be positive or negative, then you might want to reconsider what you're invested in. VOO might be the better bet because at least that way you can set it and forget it.
Yeah, it, it's a pretty hard psychological game, the stock market, because you have to be starting to be like, I'm not going to watch my phone. I'm not going to buy these things. And then you're mentioning just holding on. If you have the conviction, oh, this is what I brought initially, like when you're answering tests, like for example, when you're doing the boards or it was like, oh, your first pick, that should be it. I think that's how I'm looking at the stock market. This is my first pick. I'm just going to trust what I picked. Even if it goes down, I'm pretty sure it's going to go up.
There are times when you're going to get it when it's low, but the long run, the market will continue to rise, right? If you're invested in good stocks, they will continue to gain value over time. So it's important not to stress too much. And even when Nvidia was 140, people would ask, is this a good time to invest? And I said the same thing as I always say, buy a little at a time and just continue to dollar cost average because it's really not worth stressing over a few bucks in the long run. Now, obviously, if money's tight and you're investing food money, then that's a little dangerous. And I recommend that investing in the stock market may not be the best idea in that case. Whereas if this is a savings account that money that you're able to not touch for years, then that's perfect. The stock market is just a great place. And fortunately, I think as a physician, you have an income that's decent enough that it comes in and you're able to cover life expenses. So that's why it's really important not to be in too much debt and not to be paying too much money towards lifestyle purchases. Your mortgage is over half your paycheck. You can never take a break, right? You can't take any vacation time, et cetera. And so you don't want to be in those kind of financial situations. But being able to be a little bit more disciplined as investors, I think we can do really well. It's unfortunate we start our careers later in life, but with that said, eventually we'll catch up and set ourselves up for long-term success for not only ourselves, but our families.
Thanks for going over all that stuff with us, and thanks for organizing the podcast.
This has been fun. And again, thank you so much for taking the time out to be on the show.
Thanks for having me.
Thank you.
Yeah, you're welcome. Bye, guys. Thank you very much for joining us on today's episode. Remember that stock market investing should be your foundation, but some doctors can diversify with real estate, private equity, or even medical side business. It's important to not only consider today, but to consider your future. Plan out a budget, make sure you live below your means, and start putting money away. That way you can live comfortably, and as the economy fluctuates or your job fluctuates, you will be in a stable position. Life is a long game, and you have to take it one day at a time. Thank you again for joining us. And if you want a financial checkup on air, send me an email at ogdochollywood@gmail.com. Thanks for tuning in to Doc's Investing RX, where we keep your finances in good health. Until next time.